morning. You're watching The Market right here on 80 Now with me, Aisha Faridi, Avan Dabash, Anisha Jain in the studios. And ladies, what should we start with? Happy Holi or wishing all of us and our viewers Happy Women's Day?
Lots to celebrate, and the fact that there was a lot of green on the market as well. And for now, it's a bit of a red as well. So a bit of colorful perhaps is what the market is playing at the moment.
Yeah.
But Women's Day too, it deserves a celebration. In fact, every day should be Women's Day, given the fact that we're really breaking through that glass ceiling.
Oh yeah, absolutely. But yes, like Anisha said, it's going to be a little bit of green and red. So while green is what we close the day with on Monday, but seems like it's a weak handover, and the SGX Nifty also is indicating a bit of a gap down start. And the reason why is because while we were away celebrating Holi, the Fed commentary overnight coming in, that's not going to go down well with the market, as it hasn't with the US equity markets for sure. They've definitely taken quite a bit of knock. And Fed's Jerome Powell stating that they are prepared to increase the pace of rate hikes if needed, and the ultimate rate is likely to be higher than anticipated. Also saying that latest economic data is stronger than expected. Labor market remains extremely tight. Restoring price stability requires restrictive policy, saying that we will still stay the course until the job is done. The mismatch between demand and supply says we will achieve the 2% inflation goal, and Fed is not in conflict right now on its dual mandate. We have not seen full effects of rate hikes yet, and we are not targeting a higher unemployment rate either. So clearly a hawkish commentary, and that's definitely not gone down well with the US equity markets. They've taken quite a bit of tumble overnight. In fact, it's almost a 600-point knock that you had for the Dow alone overnight. The S&P 500 index as well plunged about 1.5%, and the Nasdaq Composite as well lost nearly about 150 points. No wonder then, guys, that the SGX Nifty again this morning is playing with the color red.
Oh, well, yes, absolutely playing with the color red, and even the Asian markets have started on the back foot, so we are not alone in this. At least it's a global turmoil that we are actually kind of succumbing to. But having said that, on Monday the Q was quite strong in the sense that we started week on a positive note. The Nifty advanced almost 150 points and surpassed a level of 17,700. We made a U-turn from that 17,800 mark, but nonetheless there was FII buying as well as the DII buying, so almost a 700 to 800 crore buying figure coming in from both the FIIs as well as DIIs. And one thing that was there in the spotlight was the fact, the recovery that we have seen in the Adani Group of stocks. So since GQG partners have actually checked into the counters, we have seen a solid reversal of sorts, and all of these counters are up anywhere between 40 to 80% from their 52-week lows. And even the trend, if as far as the F&O market is concerned, short covering is something that was visible. So Nifty also saw quite a bit of short covering plus some long build up as well, and Nifty Bank too is talking about a bit of a short covering. And in fact, we have had our technical experts go on record and say that this is perhaps going to be the week that we might see 18,000 also on the cards. Unlikely to happen today, Avan, but at least 18,000 is what at least some of the technical experts are talking about this week.
Yes, fingers crossed as we wrapped up Monday's, I was going to say Friday, I'm so accustomed to that holiday saying Friday, but Monday's trading session around the 17,700 mark, and you did see fervor come in within the broader markets as well. FIIs as well as DIIs, they continue to remain net buyers. But the other big talking point today is going to be what happened with the Adani Group of stocks. Do remember they will be in the spotlight in today's trading session, as the group has announced that they have prepaid 7,374 crores, which is more than about $900 million, share-backed financing that have been made by various international and domestic financial institutions, and they've done this about 2 years ahead of the latest maturity date. In fact, they have also pledged that they will prepay all the remaining loans by the end of March. Remember, this is part of the company's plan to cut their overall promoter leverage backed by shares of the Adani Group listed companies and repay all the share-backed financing by the 31st of March, irrespective of the later maturity dates. This is the second instance of debt reduction that we've seen taken by the company in the year 2023, and they say that they have reduced their debt by $1.1 billion in Feb 2023 alone. In fact, just looking at it from an individual group perspective, there's the data on your screen. The promoters that will be releasing pledge include 11.8% from Adani Ports, 4% from Adani Enterprises, 4.5% Adani Transmission, and about 1.2% from Adani Green. Now, post this transaction, the pledge holdings will remain in Adani Power, about 25%, and some pledge in Adani Transmission and Adani Green. Remember, as Anisha just alluded to as well, you did have the latest news as well coming in from the Adani Group that the promoter group has sold 15,400 crores worth of shares or stake to GQG Partners. Let's also bring on board Anurag Singh, who is joining in on the show to discuss this a little bit more as well, Aisha, get in a view as to what his outlook is.
Anurag Singh on the show with us. Anurag, hi, morning. Great to have you on the show and thanks for joining in. The Anurag Fed's hawkish commentary. One would wonder whether this is anticipated because the markets don't seem to be, prepared for this and they seem to be taking it quite badly.
Yeah. So, Aisha, look, and I think you know my view on this, and I've been holding this for quite some time. It depends on what camp you belong to. But I think if you, even at a high level, you look at the numbers, the PCE inflation number that Fed looks at, you see that since last Jan, it's barely budging. It's all moving between 4.56 to 5.1. And that's the range it is stuck in. And that's the core inflation that Fed is targeting. So I think I understand the market is tired. There is a sense that, well, you've already reached the range, touching about 5%, 4.75 to 5%. Inflation should come down, but inflation is a mindset and it's not complying really. So I think the honest judgment is that it is very sticky. And it is all dependent on wages. So I think we'll have to look at the JOLT numbers and other numbers coming out. But I think if somebody is saying that they're surprised by this commentary, I'm not really, because to me, it's really not surprising. And anybody who goes to the markets and, look at the prices, would know that this is not a surprising commentary by Chair Powell. And he always retains that card, right? At every sentence he says, we will stay at it until the job is done. So I'm not quite surprised, but yeah, some market participants might be.
Sure, not very surprised by the commentary, Anurag, but do you also concur with the view that the rates will be much higher than what the consensus is at the moment? Right now, it's what, 5.35, what the street is working with, but the likes of Jamie Dimon, etc. also believe that level of 6 is something that you can't, completely shrug off. Your take, what the terminal rate could be?
Yeah. So Anisha, I think if I can just quickly take you back to, say, September 2021, that's when the Fed started talking about that they will be raising rates. Their estimate was that in next 1 year, the rates would be somewhere around like 0.5 to 1%. And look where we are, right? So the fact that Fed has not managed inflation as a problem in the last 40 years tells us that none of them have really faced this problem. And despite best intentions, it's very hard for anyone to really predict where it will be. My sense is that, I won't be surprised if we eventually touch 6%, because look, inflation is a mindset. It is what people expect. And I think Chair Powell said this repeatedly today as well. He has been off and on saying this. It has really got into the mindset. Even today now, if you look at the prices that are there in the market, it tells you that the corporates have already priced in for the next 6 months, wage hikes. So unless you break that cycle, it's not going to come down. So I won't be surprised, Anisha, if it touches 6%, because, let's put it like this. Whatever rate hikes have been done so far, they've all been absorbed by the economy. So, we need a bigger kicker, really. And that's a classic problem. Even in the 79, when, the inflation was a huge problem, I think that's the conundrum the Federal Reserve faced, right? That the more they took the rate hikes, the more it was becoming entrenched and absorbed by the economy. Anisha.
Sure. Anurag, so what does one do at this point of time, an equity investor? Because do you think that the market is, as you said, is not pricing it enough? So, and as it is, there is a lot of bearish view coming in after the huge upsurge that we saw at the start of the year. What are you projecting with respect to what's the best strategy on a tactical basis at this point of time with respect to your funds and portfolio?
Anisha, that's a great question, and it all depends on what kind of an investor you are. Now, look, I understand in case you are a mutual fund, you can't sit on more than 5% cash. So if the money comes in, you have to deploy it, and you really can't send the message in the market that don't put the money now because the markets is expensive. So I think that's something which is keeping the markets afloat, at least in India, right? And even passive flows out here, I think, is keeping the market afloat. And if you do not have a problem of billions, if you're running a fund in billions, then you of course can't sit out beyond a point. We don't have that problem. We are running a fund which is into millions. We can always take cash positions. And my declared position for the last 6 months has been that I'm 60% cash. Now it's like I'm 70% cash. Look, because Anisha, we don't, as a fund, it depends on your strategy. We don't have to be invested all the time, and we don't have to play these games on an everyday basis. We are value investors. We wait for the right opportunity. So I think that's the call from my side. But again, it depends on what kind of investor you are. If you are a SIP investor, probably you should continue, and you should be happy if the market corrects, because then you will buy the funds markets even cheaper, right? So I think these are kind of quick thoughts on where you stand. But if you see the avalanche coming, I can't really put my cash into the market. That will be foolish, and I can stay on 100% cash as well, waiting for the right opportunity. Anisha?
So hope the avalanche is some time away. Great to have you then on the show, Anurag. Good speaking with you as always. Well, today, though, it seems that we're bracing ourselves for a bit of a weak start, looking at the US handover, how Asia as well is panning out. But yes, India is well positioned to see stellar growth, but we must be cautious about global equity markets. That's pretty much the word coming in from GQG's Rajiv Jain as well, who's making a big bet on the India infrastructure story, and he's bet big on the Adani names as well.
Global equity markets, I feel one has to be a little bit more cautious, because interest rates have not fully, they've gone up quite a bit. But if inflation doesn't come down in a meaningful manner, then there's a possibility interest rates can still surprise on the upside. In fact, if you look at the consensus expectations on US interest rates, they have moved since February, by the way, almost 65, 70 basis points in terms of where interest rates could end up by end of this year. So I think there's still some risk. The other part is whether the geopolitical risk on a higher side. So I think we have to incorporate that, which, by the way, is another reason I actually like India, because it has less geopolitical risk. So the risk factors are a lot more favorable in India than most of the other places. If you look at the constant barrage of news coming out of Washington, D.C. against China in terms of sanction against companies, products, and so on and so forth, that is not a recipe for re-rating for China per se. So in general, I believe that the market return expectations should be on the lower side, not a higher side, because there's been a whole generation of investors who have basically seen nothing but low or declining rates, and that I think that movie is pretty much over.
In general, the view on India is that Indian economy is in a fine fettle, and we are very proud that we are one of the fastest growing economy in the world. Stability, I think, is something which is obvious, both in terms of the corporate predictability and the political stability, something you refer to. But my question is that everybody has also raised concerns about valuations in India. The reverse of what I asked you. It's like saying that in India, the market is great, but you're buying gold at the price of diamond.
Yeah, look, I think valuation is always an approximation, first of all. But I think part of the India's issue is the index composition, and I'm not saying in a bad way, but just a fact. So if you look at, for example, state-owned banks in India, well, they're selling similar values to state-owned banks in China. Look at energy companies in India, same in China. Tech companies, very similar in China. But the index composition in China is a lot more cyclical versus index composition in India, right? So if you look at pharma companies in China, they're actually a little bit more expensive. Some of the best staples in China are similar valuations in India. So I think when you adjust for that, the valuation gap is not really much different.
Welcome back. Well, as far as the timeline is concerned, it's suggesting that we'll start in the red. But is that 18,000 likely this week or not? Kunal, you stuck your neck out saying that it's likely this week. You still stick by your review?
Yeah, so I think we almost hit that 17,850 or 830 approximately on futures. The momentum is still strong on the Nifty, but I'm just more concerned on the Bank Nifty where the momentum seems to be peaking out because the market internals for the Bank Nifty are not very encouraging. We've seen very mild reduction of open interest in the Bank Nifty in the last couple of days, and that may not augur very well because for the markets to recover, we need a slew of short covering, not just a minor change of 2%. 1.5% of change in terms of open interest that may not fuel up the markets to move up higher, and that too at a time when the global markets are a bit wobbly as we saw yesterday. So I think in that scenario, I would probably hold back on the Bank Nifty, and I would probably expect that the view which we discussed on Monday, where the Bank Nifty would probably get into profit booking mode. So I would still stand by with that. For the Nifty, yes, there is a high probability that we may try and scale past at least closer to that 18,000 mark, if not scale much beyond those levels.
Naresh, do you share that optimism? Are you looking at the 18K mark decisively in today's or in the next few trading sessions? What's the view?
So I would not like to take a bet on the next this week itself. Rather, I would say over a period of time, we are slowly scaling up higher, but more on the stock specific side. So it's time to be more stock specific or rather than index specific. Till the time we are in this range of 17,300 to 18,200 roughly. So in this period of time, one would be better off trading leadership stocks and say severe bounce backs, because the whole range is itself 4-5%, so it does not really make a great trade in a big way. So one has to buy the dips, sell the rise. So overall, going forward, 17,600 to 500 zone should act as a support, and 17,900 to 18,000 in the near term as a resistance. And in that period of time, focus more on stocks.
Okay, since it's all about stocks, Naresh, what is it that you're buying or selling this morning?
So again, going with the names in the PSU category. So first is the buy on Power Grid. Now this is a stock which has continued to scale up slowly and steadily. Now if you look at the stock on a dividend adjusted basis, it is not far away from an all-time high. The dividends mask out the momentum in most of these PSU names. So Power Grid is again given a fresh breakout above the 225 mark. So a retest of the same today would be a buying opportunity. Expecting it to cross into new all-time highs. Stop loss at 218 and a target price of 250. Second is a buy on ONGC, which has continued in the momentum. And also the stock is above the prices where it saw a big crack around the windfall tax announcement. That 155, 158 mark has been taken out. Add to it the dividend, it's clearly taken out. Expecting this to go back to that 180 to 200 zone, which was made around the Russia-Ukraine crisis. A stop loss at 150 and a buy on dips.
Okay, so that's the take coming in as far as the top recommendations is concerned. But Kunal, what are you recommending for our viewers this morning?
So I'll move out from the PSU theme and focus on one sell and one buy this time. So sell on Asian Paints. The stock in the last couple of days have shown some very good momentum, but on the hourly charts, the stock has come back towards a peak in terms of the overbought nature of indicators. So would suggest a sell, targets of 28.20, stop loss at 28.90 for Asian Paints. And the second would be a buy on Cipla, going completely contra over here. The stock has been beaten down significantly over the last 5-6 trading sessions, fallen by more than 15 to 16%. I believe now at 880 odd levels, the indicators are extremely oversold. The stock formed a bullish hammer pattern on Monday's trading session. So on the back of it, I would expect some recovery. 904 as a target, stop loss 860.
All right, there you have it. That's the strategy that Kunal is adopting, a buy and a sell call, whereas Naresh continues to stick with the PSUs. Moving right on then, let's hear it out from Manish Sonthalia then. He shares his outlook on the likes of new age tech companies like Paytm and Zomato, saying there's no one size fit all when it comes to new age stocks and that these companies will do well in the future. Listen in.
Some of these names will actually become very big. And given the fact that a lot of them have seen more than 50% sort of a correction, I would believe, and particularly so if you look at our portfolio, we like Paytm as well as Zomato. We think that this habit formation of food delivery is irreversible as far as India is concerned. It's similar to, consumer companies. You get into that habit formation, you like the product, and then it becomes a way of life. So I think when the IPOs came for these companies, it was all about total addressable market, the TAM. Currently, we are going through a phase of the path to profitability. What is the contribution margin? When will the EBITDA be turning positive? So on and so forth. And by the way, these companies today are focusing more on profitability than growth. One size fits all for the entire new age tech companies, but there's definite value in some of them, and some of them will not only survive but grow and thrive and create a lot of.
Welcome back. Well, one stock which has been, or rather one group of stocks which has been in the spotlight of late has been the Adani Group of companies, and there has been a lot of news flow around it. Of course, there's the fact that GQG Partners bought around 15,500 crore rupees worth of stake. Now we have the news flow that the Adani Group has also repaid loan worth around 7,800 odd crores, and then also it has been taken out of the ASM list, at least as far as Adani Enterprises is concerned. To pass through these entire details, as Somit is joining us. Somit, hi. Good morning.
Well, the most important news that has come in for the Adani Group of companies is the fact that the promoter has prepaid debt worth close to 7,374 crore rupees. Now, this debt was share-backed financing, which means that the loans were taken by the promoter entities by pledging the shares in the listed companies. Now, the company has, the group promoter has also said that going forward, they are aiming to bring down their pledged shares in the listed companies to zero by the end of this financial year. Now, this is the second such instance in 2023 where the promoter has paid down their private debt. In Feb 2023, they had reduced their debt by around 1.1 billion US dollars, and now they have brought it down by another 900 million US dollars. Now, along with this, if you see, as of December 2022, of the 10 listed Adani Group companies, 5 companies' promoter shares were not pledged, while among the pledge holdings, if you see, Adani Power had the highest promoter holding as pledged, followed by Adani Ports, Adani Transmission, Adani Green, and Adani Enterprises. Now, because of this $900 million reduction in debt, Adani Ports pledge holding is expected to go down by around 11.8 odd %. Adani Enterprises pledge holding is expected to fall by around 4%. In Adani Transmission, it is expected to fall by around 4.5%, and in Adani Green Energy, it is expected to go down by around 1.2%. Now, as per our calculation, most likely the pledge holding going forward would now remain largely in Adani Power, that is at close to 25%, and some holdings in Adani Transmission and Adani Green would continue to remain pledged, that is around 1 odd % of the promoter holding, while in case of Adani Ports and Adani Enterprises, it seems that the entire pledge holding has now been removed post this repayment. Now, this prepayment of debt is largely on expected lines, because given a couple of days back, the promoter group had sold shares worth close to 15,400 crore rupees to GQG Partners.
That's the latest news that's coming in. Thanks very much, Somit, for summing it all up for us. But lots of other stocks as well that are in news today. And you have Bajaj Auto, as they came out with some of the key takeaways from their management meet that Motilal Oswal has listed out. They said that exports could remain weak and that they may see a recovery only from Q2 FY24. Let's bring on board Vamakshi then, who joins in to discuss the latest on Bajaj Auto's management meet. Vamakshi?
Well, absolutely. Largely what the management has highlighted is that the exports are expected to remain stable over the next few months at the lower levels that were seen in Jan 2023. But nevertheless, the management is expecting a recovery to kick in from the second quarter of the next financial year. Now, Brazil is a huge untapped opportunity in their opinion, and the company has recently entered this market. The Triumph launch will happen soon, and FY24 actually is the year that will see the full benefit on this launch. So, entry in Brazil and the upcoming Triumph launch are expected to be the new growth drivers for the company. On the flip side, however, the Egypt ban is hurting market share for the company. Volumes are down nearly 35 to 40% from the peak levels, but the management is said to be in active discussion with the government through its local distributors. Now, as far as the domestic motorcycle segment is concerned, they're largely focusing on the 125cc plus market, and in the festive season, in fact, the company grew nearly 2.5 times of the market in this segment. The EV plans are also gathering momentum with the launch of two-wheelers under the Yulu brand, as well as the upcoming three-wheeler launch as well. Apart from that, the company is also quite cautious of the commodity cost inflation that has been gaining strength from the lows that were seen in Q3 FY23. So largely those were the important takeaways from the management meet, and given all these factors, Motilal Oswal has a neutral rating on the stock, target price of 4,150 per share.
Thanks, Somakshi, for that. But Hemang Jani, also from the Motilal Oswal Group, joins us to talk to us about the stocks and the fundamentals of the market. Hemang, I just wanted to start by talking about the Adani Group of stocks, and Somit was just talking about the recent news flow around it regarding reduction of the prepayment of debt as well, reduction of pledge that has happened, plus the fact that there was the commentary coming in from GQG's Rajiv Jain that perhaps they're not done with their overall buying yet, and that is expected to have a sentimental impact as well. What's your take on the Adani Group as a whole, and if at all, what would be your top bet?
Good morning. So our view is that now we have to look beyond this one group where the focus was there, and to some extent the sentiment got damaged for the PSU banks or the banking sector, and we've seen some revival in the last 2 days. I think more importantly, as we go ahead, the market would start focusing upon the data points, which are coming out globally, the hawkish stance from the Fed chairman, as well as the slowdown that we are witnessing on the consumption side. So I think, though we have seen some pullback in the market, given that the global setup and the, this consumption slowdown, people would look to focus upon the sectors where the earning visibility is still, better compared to some of the, consumption-led names. So I think we should focus upon those sectors and stocks rather than trying to focus upon the overall market or a particular group.
All right, fair enough. That's the outlook coming in on the entire Adani Group of stocks. But there's also other stocks that are in news today, Hemang, and wanted to get in your take as to what the outlook is on the latest takeaways from the Bajaj Auto management meet. They have acknowledged that exports are slowing down, EV plans are gathering momentum, and they are saying that the exports could recover by Q2 FY24. Your views?
So incrementally, things are not looking positive for Bajaj Auto because 40-45% of their revenue is still coming from exports market, and you have some headwinds, and we've seen that the production cut has been announced. I think the important monitorable for Bajaj Auto are the their entry in Brazil and the new launch of Triumph. And we think that the stock, would remain a little subdued, given that we do not see incremental positive news. Even two-wheeler as a space has remained a little subdued. So we think that makes more sense to go with the four-wheeler names or an Eicher, which are relatively better placed, or even for that matter, Ashok Leyland.
Okay, Hemang, stay with us. Lots more to discuss, but let's just focus and get you some fundamental ideas. Here's Neeraj Devan of Quantum Securities telling us why he sees potential in Zomato from the entire New Age pack.
I think most of the companies, whether it's PB, FinTech or Paytm, are not still giving me that confidence to invest into these, even Nykaa for that matter. I think Zomato is still one which the kind of distribution network that they have, I think that's unparalleled. They have an infrastructure in space. I think Zomato I would still look at and keep as an investment, but I don't think there is anything else that's really worth putting in money or looking evaluation very attractive to me. I think you need to see them making some profits and seeing 2-3 quarters of decent growth in profit basically. Then only you can take a call. So I'm not really a fan of the new age company.
Hemang, this morning there's also a positive note coming in from CLSA talking about the power sector as a whole, how they're quite positive on it. Of course, there's the fact that it's going to be hotter than expected summer, so demand will continue to be on the higher side. They're still calling it inexpensive and believe that a lot of these counters also provide support with respect to high dividend yield. How are you looking at the power sector, and is there any specific name that you want to flag out?
So clearly, the utility stocks have remained relatively better off in the last few months. And if you see the volume data points and the tariff part, there is a fair bit of stability. So we do think that names like NTPC, Power are the ones which will provide some sort of a stability with a good dividend yield for those who are looking for a low risk ideas. At the same time, some of the companies which are providing the equipments to some of these utility companies, on the capex side, I think that is the only segment which is showing a lot of strength, and the order inflow for them continues as the capex cycle is moving. So I think we should focus upon capex. So the names like ABB, Siemens, Larsen, and also some of the power utilities in an environment where there is a slowdown and the overall market may not show much of resilience.
Right. Just looking at what the metals pack as well has been up to of late, and fairly volatile, one must add. There's a Kotak upgrade though coming in on Tata Steel this morning. They've upgraded now Tata Steel to a buy. They're saying that it's pretty attractive, a risk reward, and domestic margins are going to recover to mid-cycle levels. They see upcoming projects to aid earnings. Saying that Europe does remain under pressure, but relevance now is declining, and that capital allocation remains crucial for a re-rating for Tata Steel. Kunal, just how you think, not Tata Steel in particular, but how metals as a sector is going to move in the near term?
So, Tata Steel has been a big underperformer, and I'm not extremely bullish on Tata Steel. Looking at the prospects that the stock would probably be a class outperformer with respect to the entire pack on the metal names. But then there are many other metal stocks which have been beaten down, so which have been very strong movers earlier. And in this last 1 month of price correction, these stocks have come back into an oversold territory. So, for example, the likes of JSPL, the stock has made a retracement of I think 18% from the 600 odd levels. JSW Steel has corrected more than 10 to 15%, which is traditionally a very low beta stock from the entire metal pack, or a low to moderate beta stock from the entire metal pack. Even Hindalco has come back towards that 400 support where it's bounced off from those levels. SAIL surprisingly is showing a lot of resilience at this 80 odd support mark, where the stock has been holding on to those levels of 80 even in this last 1 month of the price correction. So I think there are, other than Tata Steel, there are many other stocks which are looking very strong, and these stocks have made a good comeback. I would particularly be looking out for JSW Steel. If the stock corrects to say 630, 650 levels, or Hindalco if it comes back up the 400 mark, those are very good price territories to try and chip into these metal names.
All right, those are the select metal stocks that Kunal is looking at. Well, speaking of that space, the Vedanta Group, which owns 64.9% stake in Hindustan Zinc, is now planning to acquire an additional 6% stake in the company. Let's take it across to Ashesha to understand what that entails for the company down the line. Ashesha?
Absolutely. Reports suggest that Vedanta is in talks to buy additional 6% stake in Hindustan Zinc. This could happen at about 7,900 crores. Now, the Vedanta currently holds about 64.9% stake in Hindustan Zinc, and with additional 6% stake, the total shareholding in Hindustan Zinc could go above 70%, which means it could lose the special right that it has on Hindustan Zinc. Apart from this, reports also suggest that they are already in talks with foreign banks to raise close to $1 billion to fund this particular 6% stake purchase. Now, Hindustan Zinc was already to acquire Vedanta Zinc International assets for about 25,000 odd crores. But government had gone ahead and raised objections to this particular transaction which was to take place. And now if this 6% stake purchase actually goes through, it could pave way for Vedanta's Zinc International business to be merged with Hindustan Zinc. Apart from this, there are also concerns over Vedanta Resources' ability to repay its debt obligations. And if this transaction goes through, they will get a funding of about $2 billion, which will help it meet its financial obligations. So, of course, for now, reports suggest that they could buy about 6% stake, additional 6% stake in Hindustan Zinc for 7,900 crores. And the direct implication could be that it could help the parent company Vedanta Resources meet its financial obligations that it has over the coming couple of quarters.
Okay, Ashesha, we'll leave it at that. That's the update coming in on Vedanta. Hemang, just wanted to know how you're approaching Vedanta right now, if at all it's in your conviction list, because now they're claiming that they're going to be debt-free. Couple of interviews given to many agencies as well from Anil Agarwal seem to be hinting towards that.
So Aisha, at the moment we have a neutral rating on Vedanta, and recently the stock has actually shown some sort of up move. after the the yield had actually gone up on the Vedanta resources globally. And the metal space also is not looking that good, because you've seen incremental data from US, Eurozone not looking so good. China is again not very clear. So I think commodity or metal as a space will remain a little bit of range bound with a negative bias. So for now, we would stay away from Vedanta.
Let's get in your take on Z Entertainment, roller coaster ride to say the least. With the latest news that they settled the dispute with the IPRS, just wanted to get in your take as to how the charts are looking of Z Entertainment. Nuresh, that was for you. Z.
Okay. So if we look at Z, the whole move from September 2021, where it started with the initial corporate announcement, then a merger, and the stock went from 180 odd levels where it used to be before the announcement towards 350, 370 levels. Post that, it has been a slow and steady decline. There have been multiple bounce back trades, say a couple of times, mainly from the 220 mark. Now the 220 mark got taken out very recently. Saw a big downtick on a single day. Did not see a follow-up selling action below the 180 mark. So it just tells you that it will not say become a stock which goes down the drain, but rather there is no reason for you to be buying it also till the time we don't start sustaining about 220. Once it sustains about 220, that is where we'll call a panic bottom is done, and then maybe take a fresh view. As of now, it's too early to call whether the bottom is done, or it could be sideways for much longer than we expect.
Okay, sideways for much longer, though fundamental experts are telling us that at least the downside is limited. It might not go up in a hurry, but at least it seems to have found a floor for now. Hima, wanted your take regarding the entire paint sector as well. Grasim Management met a few analysts and they are talking about how they are looking at, confidently about the paints foray. They're making investment of almost 10,000 crore for this particular vertical. Would you bet on Grasim as a paints player at all, or would you stick with the, the traditional names, Asian Paints, etc.?
So, this Grasim foraying into paints, the known, news, and it will take a while for them to really, make any meaningful impact in terms of the market share, etc. And we think that, after a very strong volume growth, most of the companies like Asian Paints and, some of the other like Berger, the volume growth has actually gone down. We are seeing consumption slowdown indications. So we think that the overall sector may remain slightly range bound for now, but if you see any meaningful correction of about 5 to 7% in a name like Asian Paint, definitely it will provide an entry point.
Okay, here's another stock idea coming in. Sandeep Sabharwal and why he likes Voltas.
Voltas is actually down 30% over the last 1 year. So that reflects, I think, some confused thinking in the management in the past. But I think now they are getting things in hand. See, the core unitary cooling business has no issue. It's just that the market was bad, they did badly. They are the market leaders, and if last 2 years sales have been bad, the probability that this summer sales will be good is very high. So I think to that extent out there, they should do well. But what I saw in the result release was that they have won big orders in the electromechanical projects business, where the order book has moved up sharply to around 7,500 crores from 5,400 crores. So I think that's a positive, and if that comes in with improved margins, it could help the company turn around. So the stock is down a lot, and if because of these results, etc., if it cools off further, I would be interested in actually buying the stock. So I'm looking at it from a perspective of looking to buy rather than turning negative now when the stock has fallen so much, although we don't own it at this point of time.
gas stocks, they are the ones which are in focus. Of course, on Monday it was MGL, which was on a tear, held out by about almost 9% in trade. And this morning it very well could be IGL after the JV that they have announced. That stock could very well be also in focus. Kunal, after that almost 9% move on MGL, do we expect further up move?
Yeah, the entire space is looking very vibrant, and it's for a change because many of these stocks. So I remember tracking these names, even 6-8 months back when there was a first level of a breakout for these stocks. But then these stocks have been very volatile, or the behavior has been very erratic. These stocks have not confirmed breakouts earlier, but this time around, it's moving as a pack. So, for example, you have MGL, Gujarat Gas, which have already given breakouts. IGL, GSPL. There are many other such gas names which are looking very, very strong on the charts. And now these stocks are providing breakouts for themselves and showing a lot of consistency. So this could be a very strong change that the entire pack would be looking a lot more stronger than what we've seen earlier, maybe 6-8 months back. So I think in that regards, Gujarat Gas, MGL, IGL, even GSPL, I think these are the few names which I think traders could look to bet upon.
Yes, in fact, and we had Anshu Singhal, who is the Managing Director at Mahanagar Gas, in conversation with ET Now to talk a little bit more about what the acquisition means for the company. Listen in.
We expect that going forward in 7 to 8 years' time, the demand is going to be around 1 MMSCMD or slightly more than that. What we are seeing is the future growth potential in the company, and going forward, if the volume goes up to 1 MMSCMD, the top line would be close to 2,000 crore plus, and also the profits will be coming up very soon. I mean, EBITDA margins are expected to be positive this year, and next year onward, it's going to pick up as the volume grows up.
All right, that's the take coming in on MGL. Quite a buzzer on Monday's trading session. In the meantime, just wanted to get in your view then, Hemang, as to what the outlook is when it comes to the entire FMCG basket. Would you be very selective within this space, looking at perhaps some of the large caps? And do you believe that inflationary concerns will persist, will eat into earnings in the coming quarters?
So, Avan, two issues FMCG sector is grappling with. One is that there is a perceptible slowdown, and one will have to really wait and see how long this lasts. Secondly, these companies have traded at a very high PE multiple, and it makes it more difficult for people to really go out for them, even if there is a small correction of 3 to 5%. I think within the pack, Godrej Consumer is something that we've been liking, I think, because of the cut in the palm oil prices and the fact that their overseas business is doing relatively better. We would definitely go with that. But yes, on an overall basis, this is one sector where we expect, underperformance to continue, and we have an underweight position in our model portfolio.
PVR, that's going to be another stock which is in focus. And, Aman, you track the sector pretty carefully. Considering the kind of aggressive expansion that they're currently doing in the tier 2 and tier 3 cities, that's something that, I'm guessing the street would obviously observe very well. Chennai, not really a tier 2, but what I meant is outside the periphery of, the Delhi-Mumbai circles. They've opened 11-screen multiplex in Phoenix, Market City, Chennai, in Tamil Nadu. I think just about a week back, they opened about 6 screens in Lucknow as well. And before that, some of the other tier 2 and tier 3 cities, which they're massively expanding on. That said, another multi-starrer which hits the screens today, Ranbir Kapoor. Finally, we're going to see him on the big screens. And it seems like it's going to be at least the pre-bookings seem to be indicating that, it's pretty much all sold out. But Kunal, on the charts, PVR.
Yeah, okay, I thought about the movie.
But I'm sure in that sold out thing, I assume that,
But surprisingly,
it's been an underperformer.
Yeah, it's been a very big underperformer.
But maybe because that's of content just on the fundamental side, given the fact that maybe not a lot of these films have done well.
Yeah, that's exactly the reason why I think the stock has not played out to the expectations. And, so I remember, I think 2020 start, the stock was starting to get into a decent recovery phase, even at a time when there was a lot of uncertainty at that point of time. But then, in the last 4 or 5 months, the stock has been a big underperformer from at a point where the stock was almost at a life high, 2000 plus levels. The stock was at, I think, in 2022 second half. And from there, it's just, gone into a downward trend, strong lack of volumes for PVR. no major signs that the indicators are oversold. So when I look at the charts, it's just that the stock is going through its own trend, devoid of the market movements as such. And I think that's generally not a good sign for the stock, because when it tends to move in its own kind of a zone, devoid of the market movements, and it indicates that the selling pressure would probably continue for some more time and the stock may continue to underperform. So till the time there is no major or an immediate recovery for PVR, if the stock doesn't cross about that 1720, 1730 mark, I think it's best to avoid and just keep it on the sidelines.
Hemang, why is PVR underperforming? Because that big overhang of the Inox PVR deal as well gets lifted off now. It's a clean signal. Is it just a function of content, or people's habits have permanently changed post-COVID and now it's OTT versus big screens?
So I shared 2-3 things. One is that, of course, what you said very rightly, that people are now getting more used to the OTT platforms, and the kind of content that you're seeing there, is very refreshing and innovative. And only when you see a very good movie where the reviews are good and there is a lot of popularity, you find people going out and watching in the theaters. Also, we have to understand that this entire integration is still pending. There are a lot of regulatory overhangs which are still there, so which will have some impact. And we think that the market has not priced in this disruption in the content as yet, as PVR still continues to trade at a very high PE multiple. So we think that see some pullbacks basis the success of certain movies. But we do not think that it's a structurally long story like it used to be maybe 2 years back.
Okay, so the consumption trends, at least as far as the consumption of the movies and the viewership of all of these series, etc., changing with the OTT platforms taking pole position. But there's a lot of change when it comes to the consumption patterns in the consumer durable world as well. And some of the brokerages who have done the channel checks, and they suggest that the B2C momentum is still quite strong, and Havells is one of the names that really stood out to them. Vinny is joining us to talk to us about what exactly does the channel check suggest. Hi, Vinny.
So the key takeaways that are coming in on Havells from where B&K Securities actually met the management is in terms of where the B2C demand that has seen a quite a weakish and subdued demand has continued for the B2C segment, given that the consumer sentiment is weak. And overall, the demand was, the weakness was witnessed even in Q3. So that has even continued as of now. And in terms of entry-level products, they are struggling. But demand for premium products has been good. So yes, the high-end products, that is a trend that we've seen everywhere. High-end products are seeing better traction than the entry-level products. Now, in terms of overall, the B2B and B2G segment, that has also remained strong in terms of demand over there. While B2C weak, B2G, B2B has remained quite strong. There's an uptick that they're seeing in terms of demand over there. Let's talk about the summer season. So Lloyd's overall, that has seen a strong demand trend coming in. The outlook is remaining strong for the summer season as well. Primary sales have been quite encouraging. There's optimism even in channel stocking up by dealers as well as distributors is what is the word coming in from Havells, while secondary pickup is the one that they're keeping an eye out on, not as much as they were expecting, but yes, they're keeping an eye out on that pickup as well. In terms of the electric consumer durable segment, that has seen a good demand as well. The demands for fans is now seen stabilizing as well. Let's not forget the transition that has started from the month of January for the BEE star rated fans. So yes, now we are going to be seeing that stabilization coming in terms of the demand for fans as well. Lighting and switchgear segment, the company highlighted that the demand for switchgears has remained flat due to the slowdown in real estate launches as well as projects as well. So keep an eye on that one. And in terms of rural exposure, the company is going to be increasing their rural exposure strategically. They do not have much of a presence, so they're mainly into the mid-premium and premium segment. So now they're going to be catering to the demand for rural areas as well. So keep an eye out on that growth going forward.
Thanks very much, Vinny. That's the latest coming in from Havells on their management meet. In the meantime, let's get in a take then, Hemang, from you as to what the outlook is on pharma as a whole, given the fact that Jefferies as well is talking about lowering EPS estimates for Cipla. They're talking about share price erosion in some of their drugs. What's your outlook?
So our take is that a lot of negative, news flow and regulatory overhang has happened. The sector has underperformed. But this is classically the time when you really start looking out for opportunities also. So I think for names like Sun Pharma, Dr. Reddy's, which have been relatively better performers, I think this would be a good entry point for somebody who's looking to invest. At the same time, I think the companies where we have some sort of an overhang, let's say Cipla recently had some issues, and a couple of more companies had some regulatory issues. So I think we should stay away from there where the earning visibility is not so strong. But I think it would be good to have some allocation to pharma sector at this point.
Okay, perhaps should have some allocation to the pharma sector. But Kunal, what's your take with respect to the defense names? Even L&T, for that matter, has been bagging orders. HAL had bagged orders worth around 7,000 crore over the last week as well. Do you expect the momentum to continue on these counters on the upside?
Yeah, so earlier there were a lot of the defense stocks which are looking very strong. So like from the likes of HAL, BEL towards Mascot Dock, Cochin Shipyard. So there was this, we can call it as a dream run for these stocks where all of the stocks participated. These stocks moved up by 50%, 60%, I think in the span of just about a couple of months in the fag end of 2022. But right now these stocks are going through their own trend on the downward side. So you don't see too much of participation coming back into the likes of Cochin Shipyard, GRSE, Mascot Dock, etc. These stocks have not seen any major pickup of volumes. But on the other hand, HAL, I think that stock has made a very strong comeback. But even the likes of BEL, for example, the stock is struggling below the 100 levels. I think if I'm not wrong, there is, the stock is also on the verge of breaking below the 200-day moving average, as well as some bearish patterns on the short-term charts, which could probably indicate that the stock may continue to drag below that 100 mark for, at least over the very near term. But HAL has emerged to be a strong candidate. So from being a sector which was liked, and there was a lot of trading which was happening from the large caps, mid caps, and the tier 2, 3 names. The sector is now getting a bit more fragmented. You have just HAL, which is looking very attractive on the charts. Most of the other names are going through their own correction. My sense is that the correction could probably extend for the other names by at least another one to 1.5 odd month before these stocks they come back into an oversold territory. So as of now, would just be bullish on HAL and would probably wait out for further correction into the likes of BEL, Mascot, etc.
Right. Couple of other buzzing names, and of course the Adani Group names have seen a fair amount of recovery coming in. We've seen as to how the group is now prepaid quite a sizable chunk of share-backed financing. The promoter pledge is also going to go down. This is, remember, the second instance of debt reduction in 2023 that the group has undertaken. Remember, in the month of February as well, they reduced debt by almost $1.1 billion. So yes, that big overhang, of course, has gotten lifted, and we've seen a marked recovery coming in on most of the Adani Group names. In fact, the recovery from the 52-week lows has been as steep as 95% on Adani Enterprises. Adani Ports has recovered 75%. Adani Power is up 54%. Ambuja, ACC as well have seen a marked recovery. Adani Green has shot up 34%. Adani Transmission, Adani Total, Wilmar as well, which has jumped up almost about 34% or so. Naresh, enterprises and ports, considering they are the most liquid of the names, do you see any or sense any trading opportunity?
So it's a risky trade going forward, but say if you look at both the price charts, you want to be looking at a little bit of a dip. So if we see the recovery for Adani Enterprises, the stock had recovered to 2200 odd levels after that big fall. And yesterday the stock went up to 2130 levels and dipped back. So 2200 remains a major resistance. So one could actually be looking at a dip from here on. But to short the stock, which has already been down 40-50% from the top, it becomes a risky trade. So not a long clearly, because now we should be getting into a formation of a range. Same is the case with Adani Port. 700 to 750 was roughly a major breakdown level. We've come over those levels, so I would expect it to not cross 750 so soon. So at 700, 720, the trade is to actually go short or do nothing. So not a buy. And given the stock has already corrected, both these stocks have already corrected quite a bit over the last 3 months. Short is a difficult trade, so best left aside.
Let's try and address some buzz in the market as well. Remember, just a few minutes ago, we saw that large deal happening on the stock of Kirloskar Oil, wherein almost 13% equity has changed hands. Who are the likely buyers? Who are the likely sellers? Ajay is joining us to talk to us about what exactly is happening in this particular counter. Ajay, take it away.
Well, that's correct. This is a very overdue transaction. As a part of overall restructuring, which a lot of Kirloskar Group companies are undertaking, Kirloskar Oil Engines in particular had a particular Kulkarni family holding 13% stake, which was keen on exiting their stake and had been in discussion with funds. Our sources are telling us that this Kirloskar family has exited its 13% stake via the block deal which has just happened. This entire block was close to 600 crore in amount, and a clutch of domestic insurance companies and mutual funds have actually bought this block. So this is an important one. This was from the stock market perspective, this was the overhang, because recently Kirloskar Oil Engines has shared their 5-year plan with a lot of focus. The stock went from 180 odd to almost 350, but there was always an overhang that this 13% stake is likely to come into the market. Now that this overhang has been absorbed in the market and in a weakish market at around this price, there's no other big supply coming in the market anymore. So keep this stock on the radar. Kulkarni family's 30% has been absorbed by the block deal in today morning trade.
Okay, that's an interesting one. Ajay, thanks for highlighting all those details. Hemang, we'll let you go on that note. You have a good day as well. While we're, of course, looking at what the pre-open rates as well are indicating, let's quickly take it across back to Kunal and Naresh and get in some mid-cap trading ideas. Kunal, on your list?
So Ujjivan Financial is a stock which looks very attractive on the charts. The stock has made a comeback from those 260 levels above the 50-day moving average to, I think, 280 is where the stock closed on Monday. So would suggest a buy on Ujjivan Financial. Targets remain the same, which are flagged off earlier at 304, and stop loss could be trailed higher to 271 for traders who are looking at a fresh buy.
Naresh, what about you? What are the top mid-cap recommendations?
So that would be a buy on Indraprasth Gas Limited. Continuing the stance on the oil and gas space, we've seen good momentum. We saw Mahanagar Gas also make a breakout. IGL is coming close to that 445 mark, which is a big resistance. This may be the 5th or 6th time over the last few weeks where the stock is coming there. If that breaks out and sustains, we have a quick move towards 500 levels. And also the stocks have not done well post-COVID. Say one of the few sectors which have actually not done well or even crossed the highs of 2020. Expecting Indraprasth Gas to make a breakout move in the short term.
Okay, let's tell you what else is making news outside the world of business. And social media giant Facebook parent Meta plans a fresh round of layoffs in an attempt to restore profitability. Thousands set to go jobless as soon as this week, according to sources. Remember, this comes just 3 months since its previous round of layoffs, where they cut as many as 11,000 jobs. Also, Tesla chief Elon Musk hits another bump at Twitter, apologizes to a sacked Twitter employee after taunting them over the social media platform. Musk's apology said that he had misunderstood the employee's situation, that which was based on inaccurate information from others. And back home, PM Modi, while addressing a post-budget webinar, said that RuPay as well as UPI technologies are India's identity in the world. He also said that in the era of Industry 4.0, platforms developed by India are becoming models for the world.
Moving on, tracking news flow from the US, which is now set to lift the mandatory COVID testing for people traveling from China. That's the news according to reports. US now joins the rest of the countries in dropping that requirement. This move follows Japan as well, lifting their COVID curbs just last week. And at the first meeting of the India Central Asia Joint Working Group on Afghanistan, India has said that it will send 20,000 metric tons of wheat. India and 5 Central Asian countries have asserted that Afghanistan's soil must not be used for any terrorist activities. And back home, Mumbai has logged record temperatures on Monday at 39 degrees Celsius, the highest temperature versus any part of the country. Light rain, thunderstorms and lightning gave relief on Tuesday, bringing temperatures down to about 35 degrees Celsius. And in a big move for the Indian Air Force, they've appointed the Group Captain Shahzala Dhami as the commanding officer of the missile squadron near the Pakistan border. Shahzala, who is a qualified helicopter pilot with over 2,800 hours of flying experience, will now oversee the missile readiness and command control in one of India's most sensitive border sectors.
Well, let's take a look at what the suggestions and recommendations are coming from our chartists as far as the index are concerned, because for now the pre-open rate is suggesting that we are likely to open with a considerable cut. After that cut also, Kunal believes it's not most recommended to buy at that point of time, so a hold coming in from in fact all three of our technical experts, Kunal, Naresh and Kush, they all maintain a consensus hold as far as the Nifty is concerned. Similar view coming in as far as Bank Nifty is concerned. Kunal is recommending not to take any fresh positions, so it's a no trade zone for him. But Naresh and Kush believe that it's a good time to probably hold your positions as far as Nifty Bank is concerned. So a hold coming in for both Nifty as well as Nifty Bank.
Okay, getting set then for the market opening, and let's just revisit what the pre-open rates are indicating, and it seems like it's going to be a bearable start. I mean, much unlike what the US or the Asia handover has been for us, just mildly tempered is how we're ready to kickstart in trade.
All right, just about 4 minutes to go as we'll be opening up for trade, and you have a pretty, a pretty wobbly handover coming in from Wall Street. This is largely owing to the kind of commentary that really shook up the U.S. equity markets from the U.S. Chair Jerome Powell. In fact, you did have the Dow, which was down about 575 points. You had the S&P 500 as well in the red, and the Nasdaq too losing out. The Asian markets as well, for the most part, were in the red, barring the Nikkei and the SGX Nifty as well, indicating that it would be a softish start for our for the rest of our markets. Meantime, you've also got the US 10-year bond yield, which scaled up to 15-year highs, largely on the back of the commentary that came in from the US Fed. On Monday's trading session, while we did manage to scale that 17,700 mark, you do have a lot of technical experts as well closely looking out for that 18K mark down the line. But Kunal, just to reiterate your position on the Nifty Bank Index, because you were saying that that is going to be very closely monitored over the next few trading days, right?
Yeah, I would not be too much bullish on the banking index. I think from here on, the expectation would be that the bank would probably face resistance at 41,600 to 42,000 mark, and it's always better that you at a higher point of resistance, or as now the index comes closer to a resistance zone, that you either book out profits or look to initiate mild positions on the contrast side. I think that's the trade for the banking index. I would expect that if this resistance holds up, then the Bank Nifty could probably even fall back below that 41,000 mark over the next couple of trading sessions. So I think it's better to stay light or not trade on the Bank Nifty, at least on the long side.
A couple of other stocks which are going to be in focus today, and we're looking at for power grid as well. Considering the buoyancy in the entire sector, not just power grid, almost for the last 5 odd trading sessions, they've okayed a 524 crore rupee investment to Eastern Region Expansion Scheme. So just look out for what that stock does in trade, although in the pre-open rates, it's not really showing you much of excitement. Let's see what Adani Ports, Adani Enterprises, Adani Transmission and Adani Green are up to. Quite a bit of promoter holding is going to be released on these names, and they are surely enough holding out very smartly in the green. Almost 1.5% kind of gain coming in across the board pretty much. Sun Pharma as well, they've completed the acquisition of Concert Pharma. We'll delve into a little bit more detail as to what this really brings on the table for them. That's another stock which is in focus, although it starts off about 0.5% lower. There's Zydus Life as well, which has got a final approval from the US FDA for one of the capsules. That's both 2.5 as well as 2 mg tablets that they've actually come up with. And then Z as well, this continues to be in the news. The settlement agreement with the creditor has been reached, and Citi has now asked the creditors to submit the claims by today. So that's going to be another stock which is in focus, holding up quite okay, 1.5% up in the green. IGL, of course, that's the big one. After that big move on MGL that you had on Monday, today it's IGL, although you're not really seeing any big move on the stock. They're looking at setting up a smart meter management plant with Genesis. That's the other stock which is in focus. But that said, it seems like we're headed in for a rather tempered day. Kunal, if we just had to pick up a sectoral trend, either the metals weakness, the Adani Group recovery, or for that matter, that banks have been very bifurcated. Private banks underperforming, some financials or some odd banks doing okay. But you're not you're not really seeing a secular trend within the banks. What trend do you think is going to dominate in the next few days?
So I think this inconsistency is what is dominating the markets right now, because even from the other sectors like IT, for example, the move is very bifurcated, as you rightly said. Even from the metals pack, it's very similar, and most of the other sectors. So I think in this kind of a scenario, it is always better that you be at a stock specific approach and do not pray for too much of momentum on the upside.
Okay, getting set then for the market open. There comes the bell. After a day's break, we're starting off tempered for both the Nifty as well as the Sensex. Pretty quiet, one would have to say, although these are early days. I don't think we're going to quite follow what the US equity markets or the Asia handover was. Nifty bank lower by about 0.5%. That's pretty much doable for us. The breadth as well hasn't really plunged or anything. A decline of 846 to 566 account on advances is pretty doable. We've definitely had worse days. It's the IT and the metals, the globally linked sectors, which are actually underperforming what the benchmarks of the Nifty or the Nifty bank rather is currently doing. They're the ones which are taking a bigger knock. About 1% or over 1% is the kind of move that they're currently seeing in trade. Let's first start with the Adani Group names. That's where all the news of late has been, be it Adani Ports, be it Adani Enterprises, Adani Transmission, or for that matter, Adani Green. A lot of promoter shareholding has been released, and all of these stocks are holding up well in the green as we speak right now. Adani Gas 4.6% higher, Green up nearly 5%, Wilmar up 2.5% nearly. Adani Enterprises should come up here on your screens. That's pretty much the holdco and the most liquid of the names. 2037, an uptick of 2.5% is what you're seeing on Adani Enterprises. IGL, given that they're setting up the smart meter manufacturing plant with Genesis, IGL starts off 0.6% higher. And there's of course Sun Pharma as well after the acquisition completion of Concert Pharma, and then Power Grid, which is looking at an investment of 524 crore rupees to Eastern Region Expansion Scheme. These are a couple of stocks which are in focus. Let's see whether there's any follow through on MGL after that near about 9% move that the stock saw in Monday's session. And by the way, the Shriram Finance block deal, 91 lakh shares have traded hand. That's almost equating to about 2.5% equity, which has changed hands in a block deal. The stock currently flat as we speak right now. So it's largely really metals and IT which I can spot as a red point on the screen, but 0.5% lower, Anisha, not all that bad.
Yeah, not all that bad, and there are pockets which are actually doing well. IT surprisingly is actually holding up in the green, especially if you look at the mid-cap names, they seem to be doing all right. Okay, no, it's now moved into the red again, and it's names like Wipro, TCS, etc., which are down in the trading section. Most of the sectors are trading in the red with the exception of media. That's because the entertainment is reacting positively, and Sun TV2 has opened with a bit of a green start. So overall tempered, yes, but 17,625 is where we are at for the Nifty at this point of time. Let's take the first trades then. Kunal, you go first. What are you spotting?
So yeah, nothing I would say concerning for the markets, at least as of now. We are just opening with the kind of ticks the SGX Nifty was indicating, 50 points odd on the Nifty and 150, 180 on the Bank Nifty. So we'll probably wait out for at least the first hour or so to try and understand the patterns of the markets. But then the stock which I would be looking to buy at opening would be Cipla. My sense is that the stock has come back into a deep oversold territory on the indicators. So I think it's a good contra bet from current levels, expecting the targets or the stock to hit back to levels of 900 plus over the very near term.
Okay, just wanted to flag out Kirloskar Oil Engines as well, because that had started with an uptick of almost 3%, but it's piled on gains and it's a 9% move that you're witnessing at this point of time. We pointed out how the 13% equity has changed hand. The supply has been met with enough demand, and that's the reason you're seeing that momentum on the stock as well. But Naresh, in the meantime, what are the trades that you are executing at this time? Any opening trade?
That would be IGL, in reverse gas. The stock has broken out above the 445, 450 mark. Expecting it to scale slowly towards 480 to 500.
Okay, thank you so much, Naresh, for that. But with that,